Hello and welcome from Trend Signal to our review of the data and events the week beginning the 14th of April. Last week saw equity markets suffer losses across the board, with the FTSE off 2%, the S&P and the Dow off between sort of 2.5%, 2.7%. The DAX was also weak, shedding 380 points or just under 4%. The dollar fell against the euro as traders did not believe the ECB would engage in any QE or interest rate moves, resulting in a rally of 180 points of the euro versus the dollar. Sterling was also strong on the back of some strong manufacturing data, and the Aussie continues to march higher against the dollar. Gold had a positive week, up $15 or just over 1.2%. Brent crude, a very geopolitical commodity, very much in the news, up $1 on the week or just under 1%. However, last week actually the data was sort of quite positive to a large extent, with good weekly initial unemployment claims in the US, good University of Michigan consumer sentiment in the US. We had good manufacturing data here in the UK, which helped push cable up to levels last seen in November 2009. And dovish minutes from the Fed's previous or last FOMC meeting also provided comfort to the markets, but all this was overshadowed by the accelerating rout in technology shares. The Nasdaq fell for the third week in a row, suffering its worst weekly performance since June 12. Biotech shares were or are particularly weak as concerns rumble on about valuations. In fact, last Thursday, the US biotech shares had their largest one-day fall in over 30 months. Why? Well, prices seem too rich compared to current results, so concerns over valuations, and I think we are in the first quarter Q1 earnings season, and I think those concerns have been rumbling on for a good 2 or 3 weeks now, and just accelerated so towards the end of last week. Overnight developments in the Ukraine. Sloviansk in the Donetsk region is surrounded by pro-Russian militia, and I think that's resulted in a lot of mudslinging between the US and the Ukraine, and indeed obviously Russia. These Russian-backed militia have been given an ultimatum by the Ukrainian government, in fact has actually already passed, to leave government buildings or face a full-scale anti-terrorist operation. Anyway, Russia did call an emergency meeting of the UN Security Council yesterday, that's Sunday, to complain about the Ukrainian aggression against Russian speakers in eastern Ukraine. Unusually, there was little support for the Russians, even from the Chinese that tend to support Russia at the UN Security Council. So what effect will this have on the markets? Well, it'll weaken stock markets, especially those close to the Ukraine and Russian economies. So you'd expect to see weakness in the German DAX, the Russian MICEX, and to a lesser extent in the Euro stocks and the sort of more westerly European economies, and obviously those in the US as well. Other effects would be a hardening in the gold price and a knee-jerk bullish reaction to the US dollar, but this has been fairly muted so far as we speak on Monday morning. But if we see a change in the Ukrainian situation for the worse, then I'd expect to see these types of moves. So let's have a look at the data and events for this week. Have a look at Forex Factory. Quite a bit of data out actually, and I'll start with Monday. With the core retail sales in the US being the first number expected. We are looking for a small gain in core retail sales. We're looking at core retail sales, plus 0.5% is the expectation there. We then jump to Tuesday, where we have our own inflation data here in the UK. Our CPI, we're looking for a number of 1.6%, so another fall in the reading from 1.7 last month. And this is largely down to a fairly sharp decline in petrol prices, 0.8% down there. So that is the reason why we're seeing that fall. 10 o'clock in the morning as well, on Tuesday, we have the German ZEW Economic Sentiment Indicator, a survey of investors and analysts, 46.3. So a slight softening in that number, which I think is probably reflecting partly the Ukrainian situation, partly the stubborn strength in the euro, which will have a negative effect on growth there. We then jump to the afternoon, where we have the inflation data in the US, CPI, which is very much under control, as indeed it is in the Eurozone and in the UK. Plus 0.1% is the expected number there, despite high food prices, which has seen their largest increase in 2.5 years, partly offset by significantly lower gasoline prices. Janet Yellen, the chairperson or chair of the US Federal Reserve, is speaking at 1:45 in the afternoon, so before the US markets open, and she could talk about unemployment, QE, interest rates, so that could have an effect on the markets on Tuesday afternoon. Overnight, we have the official announcement from the Chinese state on GDP and industrial production, and that could have an effect on Wednesday morning when we wake up with respect to our equity markets, depending on perhaps what the Ukrainian situation has been doing. We then have unemployment data in the UK at 9:30 on Wednesday. In the US, we have building permits at 1:30 on Wednesday. Anyone trading the Canadian dollar, we do have the Bank of Canada's interest rate announcement, rate decision on Wednesday at 3 o'clock. So if you are trading the Canadian, then please be aware of that release. We then jump to Thursday, where we have the regular weekly unemployment claims in the US, and then followed up 3 o'clock in the afternoon on Thursday by the Philadelphia Fed Manufacturing Index. This is probably one of the more important reports this week, and that is looking for a slightly stronger number in the Philly Fed, which so manufacturing activity improving in the US. We then have holidays. It's Good Friday this Friday, so it is a market holiday both across Europe and in the US, so all markets will be closed. On Monday, it is a bank holiday in the UK, but it is all normal market hours in the US, so the markets will be open in the US. Good luck with the markets, good luck with the trading until Thursday when we reconvene to review the first few days this week. Thanks very much for listening, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.